Hey, what's up you guys? Welcome back. So I wanted to give you guys an update on some general thoughts I had about investing in 2021 and what's my personal plan going forward. So I also had some thoughts that I wanted to share about individual stocks and assets that I'm holding. And I just felt like there wasn't enough content for me to make a separate video about each topic. So I'm just going to jumble them all together, and excuse me if I ramble on a bit. Today I'm just going to ramble on some various thoughts I have about investing and going forward in 2021. I'm recording this video in the middle of February, so if you're watching this in the future, you can go back and evaluate whether or not I'm right about some things, and be sure to leave a comment down below. And you might as well smash that like button while you're here as well. It does help out with the channel and helps out with the YouTube algorithm. So let's jump in. Okay, so first thing I wanted to talk about is that I've been hearing a lot of talk about an impending market crash, and I have to say that these concerns are definitely justified at this point, because if you look at the S&P 500 PE ratio, well, it seems like we're in a bubble, does it not? We're at one of the highest points historically. I think the median PE is at like 15 and we're at like 40 now. So I'm not going to bore you guys with other charts, but if you look at PEs for other indices like mid caps and small caps, you'll see a similar pattern. We're at like one of the highest points historically. But then again, you can argue that maybe this is only because we encountered a situation where the earnings of the companies dropped very suddenly because of the pandemic, which is a super special sudden event. And once the pandemic is over and earnings start to pick back up again, well, the charts will look less scary. But on the flip side of that, I'm sure you've noticed that we have hit all-time highs in the stock market as well in the meantime, despite having the worst fundamentals, one of the worst fundamentals we've seen in more than a decade. So here's what I think, okay? So I think that it's always risky to sell out of all your stocks. So if you sold out of all your stocks back in February of 2020, so around this time last year, well, you probably would have felt great when the market crashed back in March. But if you actually sold all your stocks back in February of 2020, there was a decent chance you would have been too afraid to buy back once the market crashed in March. So there was a chance that you would have missed out on some serious gains if you never bought back in. However, that's not to say that you should do nothing either, right? So valuations are sky high, as I said. So I think that it's definitely a good idea right now to be a little more defensive and take more of a risk-off approach. So my plan going forward is that for the next little while, I'm going to try and trim and eliminate some speculative bets and shift a lot more focus into blue chip companies and keeping a cash reserve on the side as well to take advantage of the market if it does indeed crash. So with that being said though, it's not like every single stock is overvalued. So I don't know if any of you watched Mad Money with Jim Cramer, but Jim Cramer always has this line that he says that at the beginning of every episode that I really like. So what he says that is that there's always a bull market somewhere, which I think is true. So you can find opportunities anywhere, in my opinion, regardless of what the general market conditions are. Like I'm sure there were certain industries or certain companies that fared okay even in the worst times like the Great Depression or something. So in my opinion, that there are still stocks out there that are really good deals in terms of valuation, and some might call it deep value or deep effing value. So what are some examples of deep effing value that are in the market right now? Well, I think that the first one that comes to my mind is Facebook. So I bought 10 more shares of Facebook the other day, and now I'm at a total of 30 shares at a cost basis of $209 per share US. And at today's prices, that's about an 8,000 USD dollar position. So my fellow Canadians, if you convert it to Canadian dollars, that's about a 10 grand or so position, right? So it's not a position, it's not a small position for me by any means. And I think that this is one of the most disrespected companies out there, which I think that I talked about this already in a previous video, so I won't go through everything again, but I just think that Facebook has been disrespected so much for what it is. And if you look at Yahoo Finance, the forward PE on Facebook, according to Yahoo Finance, is under 20. Seriously? Like, what? Okay, so we're talking about a company that's expected to grow their revenue by like 20 to 25% per year for the next 1 to 2 years. And we're talking about a company that has 2.8 billion monthly active users, and there's only 7.8 billion people in the world. Okay, so literally more than a third of the entire world is using at least one Facebook product at least once per month. And we're seeing operations margins improve. We're seeing that the company brought in $9 billion of free cash flow just in the last quarter. And there's over $60 billion worth of cash and short-term investments combined on the balance sheet. And all of this is trading for a forward PE of under 20. Like, get out of here, man. I'm probably going to buy more shares very soon. So yeah, that's Facebook. So I think that Facebook has a really good valuation right now, and I think that is really valuable at today's prices. So now let's talk about a stock that's not doing so well that I'm holding, which is HYLN. Now I gotta say that I haven't sold any of my HYLN shares, so I'm still holding all my shares, and as you can see, I'm down quite a bit on this position. And for my fellow HYLN bag holders, I gotta say we had a pretty good run last week until Wednesday, where we had that big drop because Goldman Sachs downgraded the stock from a hold to a sell. And let me just read you some of the main points from an article talk about the downgrade, and then I'll share my thoughts. In a note released on Tuesday, Goldman Sachs analyst Mark Delaney cut the bank's rating on HYLN stock to sell from hold, with a price target of $12 down from $19. His concern is that the heavy trucking industry is moving more quickly than expected to zero-emission technologies, meaning that HYLN's hybrid solution, which are considerably greener than regular diesel engines but aren't zero-emission, might be overlooked by the market. The article goes on to say that Delaney has a point, and it's not just about Tesla's upcoming Semi. A list of growing truck makers are planning to test zero-emission heavy trucks, including industry heavyweights like Daimler and Navistar, as well as new entrants like Nikola. Okay, first of all, Nikola? Really? We're talking about Nikola? We're talking about the same company that rolled down a model of a truck down a hill because their prototype didn't work? That Nikola? Okay, the fact that they're mentioning Nikola in the same breath as HYLN shows me that Wall Street has yet to fully understand HYLN. Now, I'm not a truck driver or anything like that, but I have done my research, and here's my take, okay? So, I think that battery technology is great, and it works well in personal vehicles or smaller scale vehicles. But the effectiveness of battery technology really goes down as you increase the scale. So, have you ever wondered why Boeing doesn't make electric 737s, or why there are no electric container ships? Well, it's because the energy density of batteries is really still far inferior compared to diesel and natural gas. So energy density, by the way, is how much energy you can store in a given unit of mass. So think of it as like every kilogram of battery can I add, how much farther can I go versus if I add a kilogram of diesel or natural gas. And you'll find that actually you can go a lot farther by adding an additional kilogram of diesel or natural gas compared to additional kilogram of battery. So this is not a problem really for personal vehicles because you're not moving around that much mass in the first place, right? Because you're just driving yourself and probably your family around. Most of the time you're driving for short distances too anyways with personal vehicles, so the range doesn't even need to be extremely good. However, when we're talking about the big class 8 semi, like the freight trucks, things are different. So with these big freight trucks, range matters a lot because the less you have to stop to refuel, the more time you can spend on the road. And these trucks really are like long haul trucks, right? So range really matters a lot. So more energy density on natural gas means that you can carry more cargo in the first place, which is very important for a business if your business is carrying cargo, right? So it takes the same amount of time to refuel a HYLN truck compared to just a regular diesel truck versus with a battery truck, you have to charge it and wait for a long time, and the range is less. And by the way, natural gas has a far better developed infrastructure compared to battery charging stations. So for Class A semi-trucks, I would imagine that they have to build special charging stations specifically for Class 8. Because I think even for Tesla, a lot of the charging stations that I've seen, like the supercharging stations, I've seen that they're all located in like parking lots or like shopping plazas and things like that, which I don't think that the space is really designed or it won't fit a Class 8, right? So even for Tesla, they'll probably have to build out like an infrastructure and maybe at least make space for Class 8 semi-trucks, right? If they're rolling out their semi-trucks. So I think that we need a different approach for Class 8 semis compared to personal vehicles. And I think that HYLN is the only company that I've seen that has a value proposition that actually makes sense. The only risk that I've seen is with execution. So that's a big risk that you're taking with HYLN, is that whether or not they're able to execute properly. So their idea is really good, and I really like the management team, and I believe in the CEO and everything. But you know, there's always a chance that they could mess up their execution, and that would just pretty much doom the company, right? So that's kind of the risk that you have to take with HYLN stock. But then again, that is the risk that you have to take with pretty much any startup. As for the downgrade, you know, if I always listen to these analysts, if you always listen to these analysts, I can almost guarantee that you would get nowhere. So I'm not saying that these analysts aren't smart, but they don't know what they're talking about all the time. And if you don't believe me, just look at how many analysts have upgraded Tesla stock in the past year or so. Like, where were you in 2019, right? A lot of people who are saying that Tesla was a sell for like split adjusted $50 per share, a lot of people were saying that it was a sell back then. And some analysts who said it was a sell back then are now saying that it's a buy when the stock is like 20 times more expensive. So when it's at like $900 per share, right? So did people forget how stocks work? Like, did these analysts forget that you're supposed to buy low and sell high and not the other way around, right? Like, when stocks are low, you're supposed to buy them, and then when stocks are high, you're supposed to sell them, not the opposite, right? So I don't know. As for this downgrade, it doesn't really scare me at all. So I'll continue to hold my HYLN shares, and I think that this could be a $200 stock in the future. But in the meantime, we're just gonna have to be patient. So here are my thoughts, and yeah, I'll leave the video here. Be sure to hit the like button if you enjoyed the video, and consider subscribing if you like the series. Be sure to follow me on Twitter and Instagram, links down below in the description as always. And with that being said, I'll see you guys in the next video. Bye bye.